All right, everyone, get ready for a wild one today. We're diving deep into Bitcoin. And you know what? We're specifically looking at how Donald Trump's recent presidential win is shaking things up in the crypto world.
Yeah, it's pretty crazy to think about. I mean, remember back in 2019, Trump wasn't exactly Bitcoin's biggest fan. He was like, nope, not a fan, not money. But here's the thing. Bitcoin has surged over 100% since the beginning of the year. And a huge chunk of that jump, yeah, it happened right after Trump won. So what's the deal? What's changed? Is this just a coincidence or is something bigger going on?
Well, it's definitely a head scratcher. You've got Trump, who once called Bitcoin highly volatile and even suggested it helps criminals.
No,
And now he wants to make the U.S. the crypto capital of the planet.
it's a total 180. So what's behind this sudden change of heart?
Well, it's hard to say for sure, but I think it's probably a mix of things. For one, the crypto industry is just getting bigger and more influential every day. And Trump, always the businessman, probably sees the potential for the U.S. to, well, grab a big piece of that.
Makes sense. He's not one to miss out on a potential moneymaker, right?
Exactly. But there's also a geopolitical angle to consider. Think about it. Bitcoin kind of challenges the dominance of the U.S. dollar.
Mhm.
So if the U.S. becomes the crypto leader, well, it could potentially shape how this whole new financial order plays out.
Okay, so Trump sees the opportunity, but how is he actually turning that into policy?
Well, one area where he's made a splash is Bitcoin mining. He's all about bringing more mining operations to the U.S. And you know what makes mining more profitable?
Cheap energy.
Bingo. Energy costs can eat up a massive 60–70% of a miner's expenses. And Trump's already pushing for energy deregulation, which could make U.S. energy prices even more competitive.
So it's not just about creating jobs in the US, it's about creating a whole ecosystem where Bitcoin mining can thrive. And that, of course, would boost the entire crypto market.
Precisely. Plus, think about the ripple effects. Cheaper energy brings in more miners. More miners strengthen the Bitcoin network. And that could make the U.S. a global hub for crypto innovation.
That's a pretty powerful position to be in. But hold on, what about the environmental impact? More mining means more energy consumption. Isn't that a concern?
Oh, absolutely. And it's something that critics are already bringing up. The U.S. is already a major energy consumer, and a surge in Bitcoin mining could make that even worse. It's a trade-off that policymakers will have to really wrestle with.
It's definitely a complex issue with no easy answers. So we've got the pro-mining stance, but what else is Trump doing to make the U.S. more crypto-friendly?
Well, he's shaking things up at the SEC, too. He's planning to replace Gary Gensler, who, as you know, was known for pushing for tougher crypto regulations.
So that sounds like a win for the crypto crowd, right?
It could be. A less strict SEC could mean more innovation and more investment, but of course there are concerns about potential risks if regulations are too lax. It's all about finding that balance.
So overall, it seems like Trump is trying to create a more welcoming environment for crypto in the US. But there's one more thing we need to talk about, and this is where things get really interesting.
You're talking about the proposed U.S. Bitcoin Strategic Reserve, right?
You got it. This is a huge deal. We're talking about the US Treasury potentially buying up a massive amount of Bitcoin, like a national stockpile, just like they do with gold.
Yeah, Senator Cynthia Lummis is the one who came up with this bold idea. Her proposal is for the U.S. Treasury to buy 200,000 Bitcoins every year for 5 years.
Whoa, hold on, let me do the math. That's a million Bitcoins. And at current prices, we're talking over $90 billion. That's like 5% of all the Bitcoin that will ever exist.
It's truly mind-boggling. And if it happens, it would send shockwaves through the entire global financial system.
So why would the US do this? What's the thinking behind creating a Bitcoin reserve?
Well, it's all about hedging against risk, specifically against economic uncertainty. Think about it. The U.S. national debt is skyrocketing. Inflation is a worry. Investors are looking for safe havens.
So just like gold has always been seen as a safe bet in times of trouble, Bitcoin is being positioned as the digital equivalent.
Exactly. It's the digital gold narrative in action. And by creating a strategic reserve, the U.S. government would be making a big statement. They'd be saying, we believe in Bitcoin, we see it as a valuable asset, and we're not afraid to embrace the future of finance.
Okay, so we've got Trump's pro-crypto stance, his push for more mining in the US, a potentially less strict SEC, and this wild idea of a Bitcoin reserve. It all seems very bullish for Bitcoin, right? But I can't help but think.
You're thinking about the volatility, aren't you?
You read my mind. Bitcoin is famous for its crazy price swings. I mean, remember that huge bull run in 2017? And then bam, that brutal crash in 2018.
You're absolutely right. It's the big question mark hanging over everything.
So how do we make sense of all this positive news when Bitcoin can be so unpredictable?
That, my friend, is the million-dollar question, and something we'll dig into much deeper in our next segment. It's almost like trying to predict the weather, you know? You can see the storm clouds gathering, but you just never know when that storm's going to hit or how bad it'll be.
And with Bitcoin, it feels like there are a lot of those storm clouds, even with all this good news we've been talking about.
That's a great way to put it. And just like with predicting the weather, understanding what's driving those forces is key. So why don't we break down some of the things that make Bitcoin so volatile, huh?
Okay, let's do it.
All right, well, one of the biggest drivers is good old-fashioned market psychology. Remember how we talked about Bitcoin being a relatively new type of asset? Well, its price is heavily influenced by speculation and how people are feeling.
So basically, when people are feeling good and confident about the future, they buy Bitcoin, and that pushes the price up. And then when fear and uncertainty set in, they sell, and the price drops.
Exactly. It's like a self-fulfilling prophecy. And this is made even stronger by the fact that Bitcoin is a 247 market. There are no breaks or trading halts like you see in the stock market.
So it's nonstop action, and any news, no matter how small, can trigger a wave of buying or selling.
Precisely. And don't forget about the power of social media in all of this. A single tweet from someone like Elon Musk, with his millions of followers, can send the whole crypto market into a frenzy.
Yeah, I remember when he tweeted about Dogecoin, and the price just exploded. It's kind of scary how much influence these individuals have.
It's a double-edged sword, for sure. On one hand, it makes information more accessible and spreads news quickly, but on the other hand, it also makes it easier for misinformation and market manipulation to spread.
So it's a bit of a Wild West out there. And speaking of the Wild West, let's talk about regulations, or the lack of them in some cases.
Ah, yes, regulation, the source of so much anxiety and anticipation in the crypto world.
It's like a constant game of cat and mouse, isn't it? Governments trying to figure out how to regulate this new and rapidly changing thing, and at the same time, you have crypto enthusiasts pushing back against anything they see as getting in the way of innovation.
It's a fascinating dynamic. And the fact that the regulatory landscape is always changing just adds another layer of uncertainty.
We saw that firsthand with China's crypto mining ban back in 2021. It sent shockwaves through the entire market.
Exactly. And it highlights the geopolitical risks that come with crypto. Governments can choose to embrace it, regulate it, or completely ban it. And those decisions can have a huge impact on Bitcoin's price and the whole crypto ecosystem.
So even though Trump's policies might seem good for crypto right now, things could always change, either in the US or in other countries.
Absolutely. And then there are the technological risks to think about. Remember, Bitcoin is built on blockchain technology, which is still relatively new. And in many ways, it's still untested.
So there's always the chance of bugs, glitches, or even security breaches that could make people lose faith in the system. And that could cause the price to crash.
Precisely. And as Bitcoin becomes more valuable and attracts more attention, it becomes a bigger target for hackers.
So even if the technology is considered secure, there's always a risk of something going wrong.
That's why it's so important for investors to do their research, choose trustworthy exchanges and wallets, and take the necessary steps to protect their crypto.
So let's recap. We've got market psychology, the frenzy of social media, uncertain regulations, geopolitical risks, and technological vulnerabilities, all swirling around this digital asset. It's no wonder Bitcoin is so volatile.
It's a cocktail of volatility, for sure. And just when you think you've got a handle on things, another factor comes into play.
You're talking about the halving event, aren't you?
Bingo. The mysterious and somewhat mythical halving event. It's become a recurring theme in the Bitcoin story.
So for those who might not be familiar with it, can you explain what the halving event is?
Sure. Imagine a system where the rewards for doing a specific task get cut in half every 4 years.
Kind of like a pay cut, but on a global scale.
In a way, yeah. And with Bitcoin, that task is mining. It's how new Bitcoins are created and put into circulation.
So every 4 years, the reward that miners get for adding a block to the blockchain is cut in half.
Exactly. It's a built-in feature of Bitcoin, designed to control inflation and create scarcity over time.
Because unlike traditional currencies, which can be printed endlessly by governments, Bitcoin has a limited supply. There will only ever be 21 million Bitcoins. And this halving mechanism ensures that new Bitcoins are created more and more slowly until that last Bitcoin is mined, sometime around the year 2140.
Can you imagine that? A world where all the Bitcoin that will ever exist has already been mined.
It's mind-blowing. And to make things even more interesting, because of the way the halving works, some Bitcoins might never actually be fully mined. They'll just stay locked away in the digital world forever.
It's like a digital treasure hunt that'll go on for generations.
But back to the present, how does this halving event actually affect Bitcoin's price?
Well, historically, each time the halving happens, it's been followed by a big price jump.
And why is that?
It's a few things. First, there's a basic economics of supply and demand. When you cut the rate of new Bitcoin creation in half, the supply gets tighter. And if the demand stays the same or goes up, that puts upward pressure on the price.
Makes sense. It's like a limited edition collectible that becomes even more valuable as there are fewer of them available.
Exactly. And then there's the psychological effect. The halving gets everyone in the crypto community talking. The media pays attention, and it creates a sense of excitement and anticipation, which leads to even more demand and higher prices.
So it's a cycle. The halving leads to scarcity, which leads to hype, which leads to higher prices.
Precisely. But here's the thing. That price surge is usually followed by a correction.
So the price goes down after it goes up.
Exactly. Because after all the hype dies down, investors realize that the fundamentals haven't really changed that much, and some people start taking profits, causing the price to fall back down.
Like a roller coaster. A big climb followed by a sudden drop.
That's a great way to describe it. And it's important for investors to keep this cycle in mind and not get caught up in the excitement.
So the halving event is definitely fascinating, and it often leads to big price moves, but it also makes the Bitcoin market even more complex and unpredictable.
Absolutely. It's just one more piece of the puzzle in this ever-changing market.
And speaking of all the pieces of this puzzle, we've talked a lot about the risks and uncertainties surrounding Bitcoin. But let's switch gears for a minute and talk about the potential rewards. Why are people so optimistic about Bitcoin, even with all the volatility and challenges?
That's a great question. And I think it comes down to a few key things.
Okay, I'm listening.
First and foremost, people see Bitcoin as a way to protect themselves from inflation. Remember, unlike government-issued currencies, which can be printed without limit, Bitcoin has a fixed supply.
So theoretically, its value should hold up better over time, even if governments keep printing money and devaluing their currencies.
Exactly. And this is really appealing to investors in countries with high inflation or unstable political systems.
It's like a safety net in a world of economic chaos.
I like that analogy. And then there's the fact that Bitcoin is decentralized. No single entity controls it, no government can manipulate it, and there's no single point of failure.
So it's a truly global currency, free from the control of any one entity.
Exactly. And this appeals to people who don't trust traditional financial institutions or who value privacy and autonomy.
It's like a financial rebellion.
In a way, yes.
Yeah.
And then there's the potential for growth. Bitcoin is still young, and its market cap is tiny compared to gold or the stock market.
So there's a lot of room for the price to go up if more people start using it?
Exactly. And don't forget all the technological innovation happening in the crypto world. There are constantly new applications being developed, from decentralized finance to NFTs and beyond.
It feels like we're only just beginning to understand what's possible with blockchain technology.
It's an incredibly exciting time to be a part of this.
So despite all the risks and volatility, there are good reasons why people are so bullish on Bitcoin and the future of crypto.
Absolutely.
Yeah.
The story is still being written, and the next chapter could be the most exciting yet.
And speaking of the next chapter, let's get back to Trump and his vision of the U.S. as the crypto capital of the planet.
Now, that's a story worth exploring further. It's definitely a bold vision. And with Trump, he loves those grand pronouncements.
Yeah.
It's definitely gotten everyone's attention.
Yeah, it's classic Trump, right? We're going to be the best, the biggest, the most crypto-awesome country out there.
You said it. But beyond all the talk, there are some actual policy moves that make it seem like he's serious about this.
Okay, so let's break it down. What would it actually take for the U.S. to become the crypto capital of the world?
Well, first and foremost, you need regulations that encourage innovation and attract investment.
And it sounds like Trump's ready to shake things up at the SEC, maybe make things more crypto-friendly?
That's right. A less strict SEC could mean quicker approvals for crypto businesses, clearer rules for investors, and less fear of crackdowns.
So basically, cut the red tape, make it easier for crypto companies to do business, and attract the top talent.
Exactly. But it's not just about loosening regulations. It's also about giving crypto businesses reasons to choose the U.S.
Like tax breaks, special economic zones. What are we talking about here?
Those are definitely possibilities.
Yeah.
We might see the creation of special crypto hubs with tax incentives, streamlined regulations, and access to venture capital.
Kind of like a Silicon Valley, but for crypto?
Precisely. A place where crypto startups can flourish, work together, and attract the best minds.
Okay, so a good regulatory environment and incentives for businesses. What else do we need for crypto dominance?
Infrastructure is crucial. If you want to be the leader in any industry, you need the infrastructure to support it.
So for crypto, that means things like good internet access, strong data centers, and a reliable energy grid.
Exactly. And remember how we talked about Bitcoin mining needing a lot of energy? If the U.S. wants to be a mining leader, it needs access to cheap and plentiful energy.
And Trump's energy deregulation policies could help with that.
Absolutely. Cheaper energy makes mining in the U.S. more competitive and could bring miners from other countries.
So it's like a chain reaction.
Yeah.
Good regulations attract businesses, businesses need infrastructure, and better infrastructure makes the U.S. even more attractive to crypto companies.
It's a domino effect. And let's not forget about education and public awareness.
Oh, right. You can't build a crypto empire if people don't even know what crypto is or how to use it.
Exactly. We need more educational initiatives, partnerships between the public and private sectors, and maybe even government programs to promote crypto literacy.
So from teaching kids about blockchain in school to having public service announcements about the benefits of crypto, it's about building a culture where people understand and use crypto.
Precisely. And don't underestimate the power of symbolism.
Symbolism, what do you mean?
Well, think about that idea of a U.S. Bitcoin strategic reserve. Even if it doesn't actually happen, just the fact that people are talking about it sends a message.
It's like saying, hey, we believe in Bitcoin. We think it's a valuable asset. We're not afraid of the future of finance.
Exactly. It's a bold move that could encourage other countries to do the same and make Bitcoin more legitimate globally.
So it's a strategy with many parts. Regulations, incentives, infrastructure, education, and a bit of symbolic power.
That's the recipe for becoming a crypto leader. But of course, there are going to be challenges and uncertainties along the way.
For sure. We talked about how volatile Bitcoin is, the risks with regulations, and the technological hurdles. But even beyond all that, there's the issue of global competition.
That's a really important point. The U.S. isn't the only one eyeing the crypto prize. China, even with their crackdown on mining, is still a major player. And we're seeing other countries like El Salvador making big moves to embrace Bitcoin.
So it's a race, and the U.S. can't just sit back and relax.
Exactly. And there's also the question of whether the U.S. can really become a crypto leader while holding on to its existing financial system.
It's like trying to live in two worlds at once. The traditional world of banks and regular currency, and the decentralized world of crypto.
It's a tricky balance, and it's hard to say how those two worlds will eventually exist together, or if one will completely replace the other.
That's a fascinating question, and one we'll probably be thinking about for a long time. But right now, it looks like the U.S. is serious about being a major force in the crypto world.
And it'll be exciting to see what happens next. Will the U.S. become a crypto superpower? Or will other countries take the lead in this rapidly changing space?
We'll just have to wait and see. But one thing's for sure, the crypto revolution is happening, and it's changing the world as we know it.
And just like with the internet in its early days, those who are open to this new technology and ready to face its challenges will be the ones who benefit the most.
It's a brave new world out there, everyone. And to all our listeners, thanks for joining us on this deep dive into Bitcoin, Trump's crypto ambitions, and the future of finance. We hope you've learned something valuable and are now even more curious about what the future holds.
Remember, the world of crypto is full of surprises, and it's moving fast. Stay informed, stay curious, and keep exploring.